Hello investors and traders, and welcome to the weekly market report with Market Guides. I'm AJ Monty. This is a one-year daily candle chart of the Diamonds Trust. That's ticker symbol DIA. Basically, it's the ETF that tracks the Dow Jones Industrial Average. And I left my lines on the chart from last week's report so you can see how the forecast worked out. This diagonal line right here was what I drew at the close last Friday, and I said that the markets would most likely pull back to the 20-period moving average, which is this blue line right here. And the end of that line being my target, you can see that the market did exactly what we forecasted last week. We not only hit the target, but we went a little bit beyond that and then bounced. So that was a win for us on the forecast. Now, interestingly enough, we closed today with a bearish engulfing pattern on higher volume. See that volume bar right there is telling us the sellers are still very motivated. And you can see that the stochastics oscillator has continued to move lower. The CCI is moving lower, and this black line down here is the momentum line. And that could very well be broken on Monday or Tuesday. If that does happen, the selling will most likely continue, and that's exactly what I think is going to happen for next week. So what I'm going to do in my forecast today is move this out just a little bit more. So this extension is what I'm forecasting for next week. I think we're going to continue lower, and basically the charts are telling us to protect against a downside pullback. So if you're long any stocks at this point, I would put protective stops underneath. And the charts are basically telling us hold off on any new buy ideas until we have some buy signals coming in. So that's for the diamonds. Now, as I hop to the VIX, this is the volatility index. This is a leading indicator that I use. It's inversely related to the S&P. This diagonal line is what I forecasted last week, with the end of the line being my target for the VIX. We did hit that target today as I record this right now on the 24th of January. And while this is a long shadow on top of that candle, we did close the VIX on a bullish engulfing pattern. So I think, I'm going to erase this line, I think the VIX is going to move higher next week and possibly test this resistance up here around 17. So I'm going to draw that as a target resistance, and I'm going to say that is the forecast for the VIX. Now remember, the VIX is inversely related to the S&P. So if the VIX is expected to move higher, then we are expecting lower prices on the SPY. So let me go to the SPY right here. This is my forecast for the SPY. I did put out a 2-week forecast on this one. Again, as I zoom in, you can see so far, we are tracking that line. I'm going to leave this in place with the end of that line being my target for SPY. Again, you can see a bearish engulfing pattern right there on higher volume. On Thursday, the stochastics crossed with a sell signal, and right here, as the CCI crosses below that horizontal red line, that's the sell signal there, and the momentum is continuing on down for the oscillators. I'm going to leave everything intact as I drew it last week, again with the end of that line being my target. We'll have to see whether or not the markets find a bottom or a pivot point before we decide to take any new long positions. Now looking at a more broad-based index in the Russell 2000, I did the same thing. I put a 2-week forecast out on that, and it looks as though we're almost at my target, which is the end of that line. Same story. We have a bearish engulfing pattern. You can see back here I talked about a negative divergence in the stochastics, which was very bearish, and that's why we took that bearish stance last week. And this is telling us that the momentum to the upside is dramatically shifting lower. And if you look down here, as I magnify this for you, that blue line in the CCI is crossing below the black line. That's the momentum line. And so I believe that the Russell 2000 is going to continue lower, ultimately hitting this support level that I drew horizontally from January 6th. That's called a flatline support level, the end of that line being my target for the Russell 2000. The end of that is 1646.21 for those of you that want to have an exact number. So keep your eyes peeled for additional momentum coming in Monday and or Tuesday. Now, if we look at the Qs, which is basically the tech sector, we're going to see a similar story, although we did not move down and hit my target. This is a 2-week forecast. Again, I'm going to leave this in place just like that. The end of that line for the Qs is going to be right around, let me see, that's going to be right around 215.86. And we have a bearish engulfing pattern right here on very high volume. Look at the volume bar here. That's significant volume. That's telling us that the sellers are moving in with force. The cross on the stochastics right there is a sell signal. The cross below that red line, which is the 100 mark on the scale to the right, that is a sell signal on the CCI. And for the option traders, they're getting pretty excited because option traders, like short traders, can make a lot of money on the way down. You just have to know what you're doing. If you're interested in learning more about what we do at The Market Guys, just go to themarketguys.com. Click on the video tab right there. It'll bring you to a library of videos that will educate you on some of the concepts that we teach. And if you're interested in subscribing to any of our trade alert services, then by all means go shop right there, and you can see that we have the services available to you, especially the Option Oracle. It's a monthly subscription. We go month by month. Equity Oracle, same thing. We do not lock people into long-term agreements. If you want to stop that service at any time, just send us an email and you're off the list. It's as simple as that. My job is to make sure you're making more money than you pay in that subscription, month by month. And I had a gentleman on the phone today with me, a coaching call that I did, and he made his money back and more today alone, just in 2 trades that we did. So I'm very excited about this market. I think there's a lot of opportunity out there. You just have to know what to look for and how to keep your opinion out of the decision-making process. Leave all of that up to the charts. Let the charts tell you when the buy and sell signals come in, and just react to the signals, and from there protect against any downside loss. It's really as simple as that. So have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.